So, Assalamu alaikum, everyone. This is super exciting. I can't even express how excited I am to present this. I have been talking about this and thinking about this, and it's really been something that's been on top of mind. And I'm sure the same has been the same for many of you guys as well. So super excited to have you guys all here, and please feel free to drop any kind of questions along the way. If you need any kind of clarifications, please let us know. So without further ado, let's get started, and we'll introduce ourselves. So my name is Fahmin Fardous, certified financial planner. And one thing that I can really share with you guys in terms of why did I choose to become a CFP. Overall, when I was in high school, I read this quote by Confucius: choose a job that you love and you never have to work a day in your life. And unfortunately, until I became a CFP and started working as a planner, I never really felt that. Prior to being at Zenith, I was at a national firm at wealth management where everyone was already a millionaire. The way I was just helping them grow their millions, and they had a lot of generational wealth. And after some time, I decided, okay, this is not serving my purpose, and I really want to make an impact and difference in people's lives. So I went and decided to pursue my CFP and found my way to Zenith about a year ago. Actually, in November it'll be a year, but it just feels like I just joined a few months ago because I'm having so much fun. And I'll let Marcus introduce himself, and then we'll talk a little bit more about Zenith overall too.
Thank you, Fahmin. And just like Fahmin mentioned, I'm super excited about halal investing and also what we're doing here at Zenith. I've been in the financial service industry for the past 7 years. In my previous role before I joined Zenith, about 6 months ago, I was an investment advisor at Raymond James Financial Services. In my current role here at Zenith, I'm the investment and operations analyst, really supporting our financial advisors like Fahmin, coming up with innovative and creative investment solutions, but also providing analysis on current investments that prospects and current clients may have, and just giving an objective insight.
Thank you, Marcus. So let's talk a little bit more about Zenith. So Zenith is a very, very unique firm. And the reason I say that is because it's we offer white glove wealth management service, but without that minimum. And that was the experience I had at my previous firm and many other firms at banking institutions. You have to have a minimum in order to get a certain amount of service, whether it's investment management or financial planning. And there are no minimums at Zenith, and that is such a huge value add. And also, it's a fee-only firm. So for those of you who might not be familiar with what fee-only means, it means that we are not selling you a product. We're a fiduciary, so we're putting your best interest above ours. So we're not making any commission. We're not generating anything from like insurance sales. We're not selling you a product. You only pay for the advice that we give you, and we meet you where you are. It's kind of a known judgment zone. So we have clients from all across the spectrum, where some people are making a few $100,000 a year and need advice on how can they be a good steward of their money versus someone who's just starting out, whether it's with investing or with just understanding their finances overall. And we meet you where you are. And the great thing is, being a woman myself, most of the employees in the firm are also women as well. So it's a women majority firm along with 100% minority owned as well.
And it's great that way. And that's one of the main reasons why I joined Zenith. Being a 100% minority owned firm, they really gave Fahmin and I the platform to even explore bringing halal investing to Zenith clients and also prospective clients. We've been working on this for the last, I would say, 5 months to bring this into fruition.
Absolutely. So let's talk about a little bit more about halal investing. But before we get into it, let's backtrack a little bit and understand why investing is important. The reason number one would be to combat inflation. Of course, we've all noticed in the past few months, even in the past year or so, prices have been rising and they've been rising dramatically. So if you leave your money in cash, you're essentially losing money. Like for example, few months ago, we've noticed that, a bag of rice that you could buy for like $10 is now up to $12, $13. And of course, I'm South Asian, so I would be talking about a bag of rice. But overall, it is something that's been on top of mind for everyone. So you don't want to lose money. That's one thing. Another thing is reaching your financial goals, whether it's saving for your children's college or, buying that next investment property or, buying that dream home of yours, whatever that timeline might be, investing will help you reach that goal much earlier and at a faster pace as well. And of course, there's retirement. This is the elephant in the room. What do we do about retirement? And this is something you cannot take out a loan for. So that's why it's super important for us to understand how saving consistently. It doesn't have to be a lot, but overall you have to be consistent. And we'll talk a little bit more about that as well. But saving for retirement is a huge value add into why investing is important. Then there's tax advantage growth. So this is where we talk about tax deferred and tax exempt. So many of you might be familiar with a 401k that is offered through your employer, which is many times you have the option of tax deferred, meaning you don't pay taxes on it now and you pay taxes when you withdraw on the amount you withdraw. And then there's tax exempt, which is the Roth option, where you pay taxes on it now, but you do not pay taxes on it after when you are withdrawing. So these are both really great vehicles depending on where you are in your financial situation and in your life overall. But the thing is, you're not paying any taxes on the growth, and that is a huge value add. For example, if you invest 10,000 and that amount grows to 100,000, on that 90,000, you don't have to worry about paying capital gains. What is your long term? What is your short term? That's not something you have to worry about. You just worry about what you withdraw if you're in a tax deferred vehicle, depending on what your tax rate is at that time of your life. And of course, building your legacy. Building your legacy is something huge. I'm, having an estate planning background myself. I work with clients day in and day out with their estate plans, talk about their estate plans and what are their goals. Many of us don't come from a place of money where generational wealth has been passed down to us. So as we think about what kind of legacy we want to leave behind, we think about, okay, what type of life do we want to leave for our children? For our grandchildren, what did we wish we had a little bit more of as we were growing up, whether we went through, college or buying that first home or even even getting married for that matter. If we had a little bit of additional financial assistance, it probably would have made our lives a little bit easier as well.
That is so true. So for me, you did a great job of summarizing some of the key reasons why someone should invest. Now I'm looking at this illustration. Is this illustration stating that I need $2.2 million to retire? Can you just provide a little bit more insight?
Yes, absolutely. So we're going to be talking about two different people here. We're going to be talking about Fatima and we're going to be talking about Ali. So let's talk about how their overall what this picture is looking like and what we're talking about. And no, I'm not saying you need $2.2 million, Marcus. You might need less, you might need more. So let's talk about Fatima and Ali here. So Fatima is 25. She saves $10,000 every single year from the time she's 25 until she's 65. So she's consistently saving for 40 years. And then she has $2.2 million. She's the red line. And then we have Ali, who is 40, and he saves $20,000, double the amount that Fatima saved for 25 years. So because he started 15 years later, he's at $1.1 million. So this is where we talk about the power of compounding and the power of time, because that consistency, even though Fatima saved less, literally half, but she did it for a longer period of time, and compounding did its magic. With 10% annualized return, basically she was doubling her money continuously, and she got at 65, she's almost more than $1 million ahead. So don't be disheartened if you haven't started saving, and if you are closer to Ali's age, it's still okay, because we can still create a plan for you depending on where you are and what your goals are. And you might not need that much, or you might need more depending on where you are, but that's why every situation is different. This illustration is really for the purpose of showing that consistency and time is really your best friend here.
That makes a lot of sense. That provides a little ease for me, but also I know it probably provides a lot of ease to people that are watching this webinar, that it really doesn't matter when you start investing. It's just the fact that you do start investing and leveraging someone like yourself that is a certified financial planner to go through all the different scenarios with you to say, okay, this is the probability of you achieving that success.
Yes, absolutely.
Well, and for me, and we touched on this, there's been several months of due diligence, looking at different providers out there of halal compliant investment solutions. And can you provide a little bit more insight into some of the research that you found for different providers?
Yeah, absolutely. So, as Marcus stated, I have been looking and searching for halal investments on my own, way longer than 5 months, to find something and a firm that I can really connect with. So overall, Wahid Investments, many of you might have heard of them. They are the creator of the ETFs, Halal and Ummah. And we'll talk a little bit more about what is an ETF versus a stock for those of you who are not familiar. But Wahid really, they're one of the firms that have a lower minimum. They have $100 minimum, but basically you take a risk tolerance survey to see how much risk you can really tolerate, and then you just start investing, and then they do the work for you. You don't talk to anyone. They are not asking you what are your goals, what are you saving for. You just kind of save and just put it in the vehicle, and they do all of the work for you. So do you want to talk a little bit more about the difference between a stock and an ETF, Marcus?
Yeah, thank you, Fahmin. So in life, there's a ton of different vehicles that you can take to get to work. You can take the train, you can drive a car, you can drive an F-150. But all those different vehicles have pros and cons, some from convenience to speed. That's the same thing in the investment world. So looking at a stock compared to an ETF, and that acronym ETF stands for Exchange Traded Fund. So for a stock, I like to use the example of Amazon. We're all familiar with Amazon. They're taking over the world. I'm probably receiving a package from Amazon tonight. A stock is a representation of one company. So you can purchase Amazon stock, and that represents the performance of Amazon. If they have great earnings in 1 quarter, the stock price goes up. If they miss earnings, the stock price goes down. One of the benefits for an exchange traded fund, an ETF, is it's a basket of investments. So instead of just having exposure to Amazon and say the CEO changes or one material event occurs, you can have a significant adverse impact on your overall portfolio. But with an exchange traded fund, you spread that risk across multiple investments. So you might have Amazon, Tesla, Procter and Gamble, to name a few. And the benefit of an exchange traded fund compared to just owning an individual stock is diversification.
Absolutely. Thank you for explaining that, Marcus. And for those of you who are not familiar with the ETFs, Halal and Ummah, Halal is basically the S&P 500, which is the 500 largest companies in the US in one index. And many of you might be familiar with that term as well. It's the index is the S&P 500. So Halal is the S&P 500 without the haram. So that's basically how it's classified. And Ummah is the same version of halal, but on an international forefront, where their domiciled companies are companies that are outside of the US and they are not US based. So ideally, Wahid is saying if you had halal and ummah, you're pretty much all set and you're good to go.
Well,
Now, go ahead, Marcus.
Well, and I was just going to tee you up for me. So it's a natural transition. We talked about individual stocks. We talked about some commonly known exchange traded funds that are halal compliant. But the next vehicle that we didn't touch on is mutual funds. And for me, you went through the entire investment universe and you found this provider that provides mutual fund solutions for clients that want halal compliant investments. Can you share a little bit more?
Yeah, absolutely. So Amana mutual funds is similar to Wahed. They have a little bit of a higher minimum. It's $250. And what they do is you basically take again a risk tolerance survey, and then you kind of choose, okay, what is my goal? And just based on your goal, you decide, okay, I want the Amana participation or the Amana income or the growth. You're basically just kind of funneled into one of these mutual funds, and then basically you keep on adding monies to it and you just continue to just save. You're not talking with an advisor, you're not having a conversation about what your goals are. What if that risk tolerance, it's 70 but you're actually at a 63 or 65, or just like even understanding what a risk tolerance is overall. Can you also shed some light upon what is a risk tolerance, Marcus?
Yeah, I can share insight into what risk tolerance is. So risk tolerance really is how much are you willing to see your money go down, right? Most of the times we're okay with seeing our money go up. You're not going to complain. Usually I don't receive calls from clients when they see, hey, I got an 8% return this past year. I do receive calls when the client sees a negative 8% return. And that goes back to risk tolerance. So how much is a client willing to see their account go down in a given period of time, say in 6 months, see their account go down for the potential for potential for an expected return, right? Also, something to take into account, and this is where for me and our financial advisors really play a big role, is risk capacity and objectives. So your capacity, how much cash do you have on in your bank to cover 3 to 6 months of emergencies, so you don't have to pull from your investments when they're down 8%. And then also your objectives. So if you're planning to buy a home within 2 months, even though you may have a huge risk appetite, for me and our financial advisors will go to the investment management team and say, okay, I know XYZ has a 99 risk score. They want to invest in crypto. They want to invest in small companies. However, they're going to purchase a home soon. Let's make it a little bit more conservative to make sure those funds are there.
Yeah, absolutely. And another thing, thank you for sharing that, Marcus. Another thing we really have to focus on is your time horizon. Like Marcus mentioned, if you're looking to buy that home in the next 2-3 months, please do not put that in the market, because it's just that's just a disaster waiting to happen. I mean, it could drastically go up, but then you're having to deal with the tax consequences of you having those gains. And then also, what if it goes down? Now you've saved all this hard-earned money for that down payment. Now you might have experienced volatility and it's gone down, but that doesn't mean it would have continuously stayed down. But that doesn't align with your goals of buying that home in the next 2 months. So that's why understanding your goals, your time horizon, your risk tolerance, all of those are components we have to take into account when we are talking about investing overall, and your overall financial goals too. Because investing is one component, but then achieving your goals in a different way is a different component. So that's why as financial advisors, we have to marry all of it together. And being a planner is so wonderful, because I get to see all of your goals combined and see how you're able to achieve it and how much risk do you really need to take. Some clients we have that are, individually choosing stocks that are in the 90s, and it's like, okay, are you ready to buy crypto today? They're like, no, I just didn't know any better. So even helping clients understand their risk tolerance and their and lower down their appetite really plays a role in what we do as well.
And that is a perfect tie into our process. We touched on it when we talked about risk tolerance and our process of understanding that from clients. But the first thing we do in our process is determine growth opportunities. And what we mean by that is growth opportunities in the market. And how do we determine that? We follow economic data, something that inflation is a data point that we're all aware of, is in the mainstream news. But also we look at market analysis. How is a certain segment of the market trending? Is it a good opportunity to enter? Or is it a time for us to reduce exposure to that part of the market to increase risk-adjusted returns for our clients? The next step is our rigorous screening. So with our rigorous screening, we incorporate math. And for me, my mom was a math teacher, so I guess it was genetic, so I enjoy it. But we look at the stocks, the individual stocks, the exchange-traded funds, and mutual funds, and we compare it against the market. So how did these investments perform against the market historically? Then also we look at these investments compared to its peers. So for other exchange traded funds and mutual funds that have this similar strategy, how are they doing? That once we have that core pick list there, we take it to the next level of, okay, now is this investment halal compliant? So we want to first make sure that performance is there. We don't want to concede. We're not being concessionary for performance to make sure something is halal compliant. We go for performance first and then see if it's halal compliant. And then the next part is the custom portfolio. And we touched on it. We incorporate your risk tolerance, your risk capacity, your objectives. All those things together, we're able to build a custom portfolio for you. And this custom portfolio is not like Amana's mutual funds, where we put you in there one time and it stays that way. Your life is dynamic, so it's going to change. So if you have kids or you have a need to give to charity, you sit down with us or a call and we make those changes to the portfolios. And then the last thing here is the ongoing monitoring. And I think that's the most important part, right? The ongoing monitoring is not just from a performance standpoint, making sure that these investments are still to our expectation, but also the compliant. For example, a company could become over leveraged. They might raise additional debt to expand, but that doesn't align with being halal compliant. So we review our investments on a quarterly basis to make sure that performance is there, but also that it still stays compliant to our clients' values.
Yeah, absolutely. And thank you for sharing that, Marcus, because this has been the driving force behind this webinar, is us ensuring that we have really perfected that process of understanding, okay, where do we need a lot of growth? Where is it lacking? And as we looked at the ETFs that are out there, for example, the Halal ETF, the Ummah ETF, and then the Amana mutual funds, just taking those alone, we weren't happy with the performance and how overall the portfolio was looking. So we decided to take that matter into our own hands, and then we started doing additional screening and research and creating that customized portfolio to be able to have performance and not sacrifice your annual yield over year as well, while also staying compliant. Okay.
And for me, and as Zenith, as you're aware, we leverage technology all the time for our clients, and also for our processes to become more efficient. Can you share a little bit about how we partner with Zoya to make sure that our investments are all halal compliant?
Yeah, absolutely. So Zoya is an app that basically you can put in any security ticker, whether it's ETF or individual funds or mutual funds. You can put in the ticker number or name and then search it, and it will tell you whether it's compliant, which is in the green. It'll say it's compliant. It'll say questionable, depending on some of the factors that go into it, and I will explain a little bit more about that. And then whether it's outright non-compliant. So I had, after doing a lot of research and digging, I was able to find the founder of Zoya, and Alhamdulillah, I was able to have a conversation with him. So he told me a little bit about why he created Zoya. And like myself, he was also from the investment and banking background. And he was like, every time I wanted to do some investing, I was doing extensive research. So he decided to get out of that. And then he built this app. And I'm so glad he did. And his team, because this makes our job so much easier, because we are doing that rigorous screening on the back end, but we don't have to continuously look at, okay, what is their 10K looking like on an annual basis? How much debt are they having? Is it compliant? And then also looking at their overall market cap. These are not research that we have to do. We're looking at performance, and Zoya is looking at it from a compliance perspective. And by Sharia compliance, what they use is the AOFI standard. The AOFI Sharia board is actually based out of Bahrain, and they are a nonprofit leading organization in Islamic finance. So the way they determine an asset is compliant is they'll take a look at what is the business exactly. For example, if it's in pork or pornography, those are just gambling. Those are just outright impermissible. So these are not even going to be entertained. But then there are some sectors, such as advertising, that is questionable, is frowned upon. But then we do a deeper dive, and Zoya does that as well. And they'll say, okay, it is questionable or it's not. So with all the funds that we have added in our portfolio, we have done and we have gone through that screening process. And anytime anything came up as questionable, we did additional research to see, okay, are we comfortable with that questionable approach? And for Zoya to make it compliant, to pass the security as a compliant security, the AOFI standard requires it has to be above 70% compliant, 70% or more compliant. I am not an Islamic scholar myself. I am comfortable with the board of directors at AOFI saying, okay, we're comfortable with this. And Zoya is doing that back-end research for us, and we are adding that. But the other thing is we're going to continuously also monitor, and we're going to talk a little bit more about how we monitor and ensure that the investment portfolio is always staying compliant. And that's something I know many of us struggle with. And I myself struggled with this as well, because you pick a stock. Let's pick Apple, for example. It's compliant today. And the reason it's compliant today is because they've got, obviously it's a huge company, but then overall, we also know that they have that Apple Music component. But the way Zoya will look at it is like, okay, what if they didn't have that Apple Music portion? Would they still be able to survive? And in the sense, like, do they need Apple Music for the company to thrive? And what portion and what percentage of it is in Apple Music? And it was fine. It's less than 30%. The debt has to be less than 30%. And another Islamic component view is that if a company has less than 30% or less debt, in times of volatility, they are going to be able to sustain themselves. They're not going to have to leverage that. And the company's not going to go under because they're not able to pay their debt or their creditors overall.
That makes a lot of sense. And I think you did a great job of giving insight into how we ensure the exchange traded funds and mutual funds, which I touched on, are a basket of investments, how those underlying securities, how we make sure that they are compliant in our due diligence. And that leads into this slide where it talks about diversification. We understand that we can't just build a sound portfolio based off of 2 to 3 stocks that are halal compliant, or even 2 to 3 funds that are halal compliant. That's truly not custom portfolio. So for me, can you touch on more about how we went about creating a diversified strategy?
Yeah, absolutely. So we have two pictures on the screen here. So the one on the left, it has nicely that GPA of 4.0, that 4.0 that we all aimed while in school. Well, I aimed to be a 4.0 student, and many of you, I'm sure, did as well, unless you were in AP classes and you were that overachiever. But so this GPA is given to us by a software that we use called Riskalyze. And what Riskalyze does is it really takes all of the securities and we input it to see what is compliant, how well diversified a portfolio is overall, and how well is it going to withstand volatility. So this 4.0 is actually out of a 4.3. If we knew how to have a 4.3 portfolio, then we would all be millionaires, and then we would give you guys the secret sauce and recipe as well. But a 4.0 out of a 4.3 means this portfolio is well diversified, and you can see that the annual range midpoint is 10.22%, meaning year over year this portfolio is expected to return more than 10% annually. So as we take a look at these three graphs, I'll explain what they mean. The one in the gray, many of you may be familiar with that term, with VOO, which is basically Vanguard's version of the S&P 500. And as you can see, it's tracking on the bottom. Then we have the Halal ETF by Wahid, which we talked about previously, that is trailing in the green. And then we have our portfolio that is in the blue, and you can see it's trending up. And the reason being is because we took math into account. And I'm not saying VOO doesn't or Halal didn't. We're just saying that we really chose to diversify instead of just focusing on, okay, I'm just going to try to mirror the S&P 500. So as you can see, the Halal, the blue, the risk score is 74. It's the lowest risk out of all these three compared portfolios. So Halal is at a 76, and then VOO is at 75, and we're at 74. It's not drastically different, but it's still the least amount of risk. But then if you also look at the other three arrows on the right side, which is the Sharpe ratio, the Sharpe ratio really compares how much risk are you taking in return to get your reward. So the higher the number is, the better it is. You want to be as close to as one as possible. So you can see that the portfolio that we've created is at 0.92 versus Halal at 0.72, and then VOO at 0.62. So all in all, what this is saying is by diversifying and ensuring that we have a component of all sectors. We're not just looking at the largest 500 companies in the US. We also made a custom sleeve of companies that are also in mid-cap. And mid-cap is companies that have a lot of room for growth. And do you want to go into a little bit more about mid-cap, Marcus?
Yeah, so I'll keep it very high level. When thinking about companies on a stock exchange, you have large cap, mid cap, and small cap. So in layman's terms, large cap are your Amazons. These are your large established companies that's been around for decades. Your small cap companies is like Microsoft back in the early 80s and 90s. These are companies that had a lot of potential, but most investors didn't know. They might have hoped that they turned into these global dominant technology players that we see today. But at the time that they invested, it was a lot of risk and a chance for default. In the middle between small and large is mid-cap companies. Mid-cap companies, these are established companies, but still they have room to grow. They are, for example, they're like Walmart in the 90s. So Walmart was around well before the 90s. They showed growth potential. They were more of a regional grocer, but then they started to become a national player. Those are the mid-cap companies. And what we noticed when looking for different solutions that were halal compliant, a lot of the exchange traded funds and mutual funds that we mentioned were all focused on large cap companies. So when trying to build out a diversified portfolio, we identified, whoa, there's a space, the mid-cap space that is not, that doesn't have enough exposure. And that could be an opportunity for us to generate attractive risk-adjusted returns for our clients while still maintaining halal compliance. And this is what this illustration shows, that we're able to build out a diversified portfolio that is value aligned and that outperforms other halal compliant investments that are out there.
Yeah, absolutely. Thank you for that, Marcus. And, as we recognized and identified mid-cap is a sector that we needed additional exposure to, we also identified, okay, there's a lot of room for growth here as well. And that's why, as Marcus stated, you can see we're able to outperform because that's a sector that's untapped in the halal ETF, and it's also untapped in VOO because they're both trying to mirror the largest 500 without taking into account, okay, there is that mid-cap exposure as well. And we can still, and the most important thing is we're still able to stay compliant and have that outperformance. And that is such a huge value add. So you don't have to worry about, okay, if a company is going down, I'm also taking on a lot of added risk overall too. And this is a composition portfolio, so it is not just based off the United States as well. We also have international exposure. We also have some additional bond exposure based off of Amana as well. So it is it's not just 100% stock portfolio overall, because 100% stock portfolio would be, your risk score would be closer to 100.
Very true.
Okay, so we talk about maximizing our returns, and this is where this all ties into really understanding, finding the right amount of risk for you. You know yourself better than anyone. The advisor you speak to should also know you. The advisor's job is not to push you into certain risks that you're not comfortable with. If you are someone who is losing sleep over the amount of debt you have or the amount you have invested in the market, you are probably not the person that should be staying well invested or shouldn't have a high stock portfolio overall. You should probably be more conservative where you are comfortable in taking less risk. And the other to Fatima and Ali, you also need to see that you need to stay invested. That is something that I cannot stress long and hard enough, the fact that you need to stay invested. And the other thing is, focus on your goals. Don't worry about what is the stock doing right now. That's our job. We'll worry about that. We'll look at the performance and then see, okay, is this a company that we continue on to stay aligned with? Do we still want to continue investing in it? Or are the numbers not adding up and we need to find another company that we need to invest in or another ETF? And continuously diversifying and rebalancing. And this is so huge because it's not just set it and forget it. You need to continuously stay, especially in the halal space. We need to continuously check, is it compliant? And we're going to be doing that on a quarterly basis to ensure this security, this investment that we have, overall, it's staying invested and it's also staying compliant. We'll check it every quarter. One quarter, if it's not looking compliant, if it's not looking good, we'll put it on a watch list. And then right after that, if it's not coming back up, we'll sell it up and then we'll replace it with hopefully something better.
And for me, you did a great job of really taking us through the story of what your passion behind creating halal investments, not just for yourself. You've been doing this research for yourself for years, building out your own portfolio. We're bringing this to the masses and also sharing with everyone on the webinar our process. We want to spend some time and open it up for questions. And if you have a question, go ahead and drop it in the chat. You can drop it to general, or you can direct it to Fahmin or myself, and we can answer that.
Yes, absolutely. Please, we'd love to hear your questions. And please let us know your thoughts and anything we can further clarify. It looks like we have a question. Is halal an ETF? Yes, halal is an ETF, but it's not made by our firm. It's by Wahid Investments. So they are the ones that curated. And also, I wanted to shed some light on the fact that the ETFs that are created, they are not 100% compliant. They are also, when we check through the Zoya app, they are 70%. So they're using a different board across the, in every firm, even firms like Azad, who have a $500 minimum and focus on the halal space, they use a different Sharia board. So everyone is different in that sense, but they all use a different Sharia board, but they pretty much seem to be consistent with it has to be 70% or more compliant overall. And halal is the same thing, and same thing with Ummah. The requirements for halal overall, it's pretty standard. Like debt has to be 30% or less. The industry has to be it has to be a compliant industry. For example, it's never going to be like where gambling is okay. It's not. Certain categories are just never going to be okay, but it's just the threshold, the amount of debt they have, and then the amount of money that they generate through interest-bearing sources, such as whether it's they're paying debt, they're paying a lot of interest, or receiving a lot of interest, which is why financial institutions are not a part of our portfolio, and nor are they part of many of the other ETFs overall, because their main source of income is interest, and that is just something that's never going to be allowed. Thank you for the questions, guys. We do not have a minimum. That is the beauty of Zenith. We do all this work, but overall, our goal is to bring this platform to our first generation wealth accumulators. And even if you're a second generation and you don't have the money, and you want to get started and you want to start working with an advisor, then you don't have to worry about what the minimum is. It could be, it could be $10,000, it could be $1,000, it could be $500. We're here to help you on your journey. And let's see. Mutual funds by nature are not haram. A lot of them, for example, if you look at mutual funds from a different firm that are not compliant, then that would have a lot of interest bearing overall. But Amana doesn't focus on in that space. So they've created compliant bonds, which is also very internationally based as well, which is why they have a lot, some of the funds have a little bit more risk overall, because unfortunately in the United States, you have the interest is a huge component of finances. So going international, whether it's Europe or the Middle East, or even in Africa, depends on where it is. So it's more of a global platform from Amana mutual funds overall, but we're not relying solely on Amana as well. We just use them to hedge the risk a little bit in the portfolios, depending on which portfolio it is and on the risk component, whether it's in the 70s risk score, or in the 60s, or in the 50s. We're using it to hedge. I am going to elaborate on Tasmia's question on Walaikum Salam. What criteria is used to determine halal, and what method determines that the investments are halal? So this is where the AOFI standard comes in, because we're using Zoya's board, and Zoya's board is determining whether it's compliant or not, depending on their revenue and their debt portion, and are they bringing in a lot of interest bearing debt, or are they paying a lot of interest, versus what type of industry they're in. So we're relying on Zoya after doing our due diligence to ensure that it is halal and it's compliant. Mm. Did I answer your questions clearly, Nala, or do you want me to further clarify? We have a question from Malik. Do you want to take that one, Marcus, where he's can you explain what licenses and certifications your staff has besides CFP? So this is where our investment team comes into play.
Yes. So our founder and director of investments, his name is Jason Ray. Jason graduated from Princeton University. He's also a CFA level 3 candidate. So the CFA, that acronym stands for Chartered Financial Analyst. This designation takes at minimum 3 years for someone to become fully CFA certified. He also has extensive experience with alternative investments, all the way to public markets. My background, I majored in finance and supply chain management from Syracuse University. I'm fully investment and insurance licensed. And like I mentioned earlier in the call, I've been in this industry for 7 years, working at alternative investment shops, and most recently, before joining Zenith, with Raymond James Financial Services as an investment advisor.
Oh, to Salman's question. So when we're talking about compounding, we're talking about compounding growth and the additional monies you're going to be continuously adding to the account. And that's how that growth is going to compound on each other. We're not relying on the interest component of it. Oh, the Halal Fundamental represent. That is our portfolio. So do you want to go back to the graph, Marcus?
Yeah.
Okay. So the AHA fundamentals. So that is our portfolio. That is one of the portfolios that we created. That has the similar risk score to the halal ETF and the benchmark of VOO. So we didn't want to show you something that is more risky versus less risky because their risk scores aren't comparable. So we wanted to show based within that 3, 4, 5 points how our portfolio is also comparing overall. It's not necessarily we just want to show the outperformance. We also want to show the comparison too. So that is our customized portfolio that we're showing in the blue.
Yeah, and to add to that for me, the in the title it has fundamental 100. The key thing to focus on is the 100 part. The 100 part means that we target to have an average equity exposure of a 100% for this portfolio, for this model. We have other models that we created that are halal compliant, that have different equity targets that are based off a client's risk tolerance. So we have another model that has a 70% average equity target, and then we have a 50% average equity target. And just in really high level terms, as you reduce your equity exposure, in theory, that makes the portfolio more conservative. So less risk, but the downside to less risk is the expected return is lower.
Yeah, absolutely. And it also depends on what stage you are in your life as well. And, at that time, in the portfolios that we have less risk, we also try to focus on ensuring that you're getting more of a dividend yield just by staying invested. So you've got the return and you've also got the dividend paying you as well. Do we have any other questions? Of course, of course. Thank you for your questions, Lana. Really appreciate it. So you can scan the QR code if and I have to give I'm not an iPhone fan, but it just scans so much easier if you do have an iPhone. So this QR code will take you straight to our web page, to our website, and then you'll be able to browse a little bit more about, you know, why, how the firm was founded, and, you know, what else do we do. And if you guys have any questions in terms of how anything about the firm, please feel free to ask. But, you know, I'm also happy to share how the firm came about as well. So Jason, our founder, he as I have a few minutes, I'll share with you. So he encountered, as he was in the investment realm overall, there's a huge discrepancy when it comes to people of color being in the profession and having these services available to them. And also there aren't many women in this field as well. You know, as a CFP, I know myself firsthand, this is a very white male dominated industry. So Jason and Chelsea, my great wonderful boss, is, and I call her the boss lady because she's fantastic. And they founded the firm, they started the firm together to really bring this into color and offer these services to people who wouldn't necessarily have it available to them because they don't have that 500,000, they don't have that first million, a couple of millions of dollars to start investing, because, you know, you're on the road, but you just need the help to get there. And this is when you need help, not once when you become a millionaire. So we're here for you on the way. We're not waiting for you to get to that top and say, okay, you know, here's my hand and we're going to lend you a helping hand. No, we're going to help you get there. And that's our and that's the firm's belief. And that's everyone that is a part of the firm has the same vision to be able to help people along the way on their financial journey, wherever they might be at. Do we have any last minute questions? And you know, please feel free to reach out to us separately overall as well, to check out our website. And, you know, in even if you're not ready to invest right now, just spread the word that something like this is available out there, because many of us have been discouraged in the sense that, okay, we don't know where we can really go to be able to get this get this type of assistance for people who are not ready to start investing on their own or are looking for a little bit more guidance. So just to have a conversation, we're here for you in that sense as well. Thank you, guys. We're really, really glad you found this session knowledgeable and informational, and I hope you have a takeaway from it. And I hope you also raise some questions as to, like, you know, are you just losing money by having your money sit in cash because you don't know what else can you be doing? And the first thing you kind of think about is like, okay, I'm just going to take all that money and invest it in real estate. But anyone who has experience in real estate knows that this is not easy. This is not an easy feat, and it comes with a lot of headache as well. So you kind of have to really understand, okay, what do I want to take? Do I want to dip my toe in both? And ideally you should have you shouldn't have all your eggs in one basket. So you should definitely explore different options in diversifying your assets and growing your wealth, and of course building your legacy.
Well, Fahmin, truly an amazing job. Been great partnering with you. And like Fahmin mentioned, you have our QR code. Check out our website. Also recommend our marketing team is amazing. Subscribe to our newsletter. Stay abreast of what's going on in the market. And if you have any questions on our website, they have a contact us. You can reach out to us and we can follow up as you digest this information that we share with you today. Truly, thank you for your time. Thank you for your questions. Thank you for your engagement. We look forward to having future webinars and sharing the exciting things that we're doing at Zenith.
Yeah, absolutely. You know, we had a lot of fun creating this. and, you know, presenting to you guys. And we're so glad you guys gave us your time today. Thank you so much. Truly appreciate it. Okay, if you guys have any questions, please feel free to ask us. Our email is right there, info@networkzenith.com. And also, if you would like to send us, send me a direct email or Marcus a direct email, please feel free to email us directly as well. This is my email. And please feel free to spread the word. I want you to spread the word. I want you to tell others, like, hey, you know, there are other options out there. So thank you, guys. Thank you so much for your time. Thank you. Assalamu alaikum.